Now that the election is over and the political dust has settled just a bit, a lot of people are wondering, what does all this mean for the housing market in 2025? Will we see mortgage rates go down? Will it finally be more affordable to buy a home? Not exactly.
My name is Mason Mars, and this is my twin brother Micah. We're a local real estate team right here in Kansas City. We help people buy, sell, and invest in the KC metro area. And if you or someone you know is thinking about making a move, we would love to help.
So many people were expecting some pretty big changes in the housing market after the election, but those changes may not be coming quite as quickly as you might think. In order to understand where we're headed in 2025, it's important to know how we got here in the first place.
To start, the housing market here in KC has been plagued by some of the same problems that we've seen at the national level. Really low inventory has put upward pressure on home prices. This has been the case really for about the last decade, stretching back even before the pandemic. Inventory levels have slowly been trickling down to the point where there simply weren't enough homes for the number of buyers who wanted to buy them.
As a result, we saw unprecedented levels of home price appreciation over the last 4 to 5 years. A general rule of thumb for a healthy housing market is usually appreciation somewhere in the 3 to 6% range per year. This is what we consider a normal or average market. By comparison, in 2021 and 2022, we saw double-digit appreciation each year. This was right after the pandemic, and it was really driven mostly by low interest rates, which boosted buyer demand, as well as extremely low inventory levels. Simply put, the demand for homes far outpaced the supply, and prices shot up.
Inventory levels have been rising slightly over the last year or two, and it's made a bit of a difference in the market, especially in certain price points. We used to joke back in 2020 and 2021 that it seemed like any structure that had 4 walls and a roof would sell relatively quickly regardless of the condition of the property. We were exaggerating a bit, of course, but it certainly isn't the case anymore. Inventory levels are up about 8% from this time last year and a whopping 120% from December of 2021. This means that some homes are starting to sit on the market a little longer and condition has become a lot more important. Price appreciation has slowed down a bit from its peak in 2022, but things are still appreciating at a healthy pace.
All of this sounds like good news for the housing market, and it is, but unfortunately, the problem of housing supply is still there. There simply still aren't enough homes to meet buyer demand. Let's look at why that is and what this means for the market in 2025. The short answer to this question is that we've been underbuilding homes for more than a decade at this point. As a result of the housing crash and the recession in 2008, the number of single-family building permits fell off a cliff. It's been slowly recovering ever since about 2012, but we're still far below the levels we saw in the 90s and early 2000s. We simply haven't built enough homes to keep up with the rising population and demand.
And this is only part of the problem. The other thing to consider is that a lot of the new construction homes in Kansas City that are being built are in price points that are far above our average of $365,000. For example, as of today, there are 1,079 total new construction listings on the market in the KC metro. Only 116 of those are at or below the average price point, and 964 of those are above the average. This makes sense, of course, because by and large, you'd expect new construction to be higher end and a little bit more expensive. But if you dig a little further, you'll find that of those 964 that are listed higher than 365, 50% of those are listed at $625,000 or higher. This means that roughly 45% of all the new construction options on the market in the metro right now are listed for more than $625,000.
I know that was a lot of numbers, but it illustrates the point that quite a bit of what builders are building isn't affordable for the average family. This squeezes a larger percentage of buyers into the resale market, which puts even more pressure on those price points that most buyers are looking in.
The other thing we're seeing is this lock-in effect, where a good percentage of the population either owns their home mortgage-free or has an interest rate of less than 4%. This means that a lot of people who may otherwise move and free up more housing inventory are deciding to stay put, which means fewer houses on the market.
We've also seen a rise in the number of people who decide to move, but instead of selling their current home, they keep it and rent it out. This further contributes to the supply and demand issue because that person has become a buyer without also bringing a home to the market. Don't get me wrong, we love this strategy and have done it several times now ourselves, but there's no denying this unintended consequence that contributes to the lack of housing supply we're seeing.
So what does all this mean for 2025? First off, a lot of the problems we're seeing in the market right now are not going away overnight. A decade of underbuilding means that it's going to take a while to build enough housing inventory to satisfy the demand. When we zoom into our market, single-family build permits for new construction here in Kansas City are projected to rise only 0.7% over the next year. So we're likely to face a lot of these same issues over the next 12 months.
Because we're still facing this problem of low housing inventory, prices are projected to rise about 5.6% in 2025. Things definitely aren't appreciating as quickly as they did a couple years ago, but they are expected to continue to rise as there are still more buyers than there are homes for sale.
Now, if interest rates fall, this could have a huge impact on both housing inventory and buyer demand. Right now, the Mortgage Bankers Association is projecting that mortgage rates will hover right around 6% for the majority of next year. This isn't the big drop that a lot of people were hoping for, but it would be a relief from the average today, which is about 7%.
And honestly, these mortgage rates are pretty average historically speaking. As much as we would love it, the days of rates being in the twos are likely gone. The rates were historically low during the COVID pandemic, and we likely aren't going to see them again, barring some other kind of catastrophic event like that. There are some projections that have the mortgage rates finishing the year in the high fives, but for the most part, the consensus is that we shouldn't expect them to fall too far from where they are now.
So what does all this mean for you? If you're thinking about waiting to buy until prices come down, you may want to reconsider. Prices are projected to increase next year, and a lot of things that are contributing to this aren't going to be fixed overnight. Rates aren't in for a massive drop either, and if they do come down more significantly than these projections, it's likely that would drive buyer demand even further, which means even more competition and higher prices. If you're wanting to buy a home, unfortunately, it's not going to get any cheaper next year.
Of course, a lot of the time we talk to people who choose to move regardless of what the market is doing. They just got married or had another baby, or they want to get their kids in a different school district to start off the new year, or maybe they had a job change that's going to take them out of state. The question of when is a good time to make a move can really only be answered by you. What the market is doing can help inform that decision, but the timing has to be right for you. If you have questions or are thinking about a potential move in the next year or two, we'd be happy to talk with you so we can plan ahead to take advantage of what the market is doing and make that transition as seamless as possible for you. Shoot us a message and let's get started.